You may think you're late to Solana, but you're not. In fact, Solana's on-chain usage compared to its market cap still points towards it being undervalued. On this channel, I've taught tens of thousands of people how to invest in crypto based on on-chain metrics, and this video is an example of that. Now let's get into it. To start, let's look at Solana's recent price action. Currently, it's sitting at around $236 as of the time I'm making this video. This is an incredible increase from around $160 just a few weeks ago, and from a low point of $110 over the summer. And if you go back to last year when we were still in a bear market, it was all the way down below $20. So it's already done multiples, right? From its low point in the bear market after FTX collapsed, it was all the way below $10. But really, most people who bought it during the bear probably got it closer to $20 and are sitting at around a 12x right now. And I know the first thought that's in people's heads is, first off, I don't want to buy something that other people bought lower. That's fair. However, consider that it was also much riskier back then. And as I'll show you later in this video, if you look at the actual on-chain usage, that's the deposits in DeFi applications on Solana, that's the stablecoins on the chain, that is the volume on decentralized exchanges, that's the fees of Solana applications. These actually all point towards Solana's market cap being relatively undervalued compared to the proportion of on-chain activity that's taking place on it. And the other thing that I know that people are thinking is, you're showing this when it's at a local high, right? It's not quite at an all-time high yet. And to that, I would say, go to this channel, go to my channel, search Solana. You can see I've been talking about Solana since last summer, right? We're talking about it a year ago, everything you need to DEX trade on Solana. 10 months ago, how to use Solana DeFi. And if you go back to the comments when I first started posting about it, again, over last summer, had a bridge to Solana from Ethereum and why you should bridge from Ethereum. A lot of nasty comments on there, right? People saying like, oh, Solana's dead. It's never going to come back. Well, guess what? It did. And to set our baseline for where Solana is relative to other top tokens, currently its market cap is around $112 billion. BNB, so Binance's token, is around 90 billion. Ethereum, which is probably going to be the best gauge for us to compare Solana to, is around 279 billion. And then Bitcoin is in a league of its own at nearly 1.8 trillion, 1.784 trillion to be exact. But I think for most of our comparisons, what's going to make the most sense is Solana and Ethereum. Reason being that Ethereum is the other largest smart contract chain. It's the other premier DeFi ecosystem, and it's the other premier NFT ecosystem. And basically all of these metrics that we're looking at, those two are going to be the leaders in virtually all of them. Ethereum's market cap is roughly 3 times larger than Solana. So now we're going to look at some metrics of usage for both chains, and then we'll try to determine, does the current ratio make sense? And first, a few notes on these on-chain metrics. We're going to focus on metrics that involve dollar values. Reason being that those are much more difficult to fake. For example, Solana completely dominates in things like addresses, transactions, etc. However, it can be really tough to verify the value of each of those addresses and transactions, how many of them are real. For example, they can be easily manipulated by bots or airdrop farming, or people making tons and tons of microtransactions, for example. And so it can be tough to actually value things based on that. And so we're going to focus on things that are dollar-based, and then we're going to also place a priority on stats that are more difficult to fake. And I'll talk about some ways that stats could be faked as we go through them and why we're going to place a priority on certain stats. All right, so now let's take a look at some stats. The website that we're going to use for this today is DeFi Llama, totally free to use, phenomenal resource. I have no affiliation with them, although I am friends with one of the founders who I've interviewed on this channel before. But here you're going to find a lot of different stats about different blockchains, projects, etc. And the first one we're going to look at is total value locked. And if you're not familiar with total value locked, aka TVL, it's basically deposits on all of the DeFi applications on a chain summed up. So for example, Ethereum has around $102.7 billion in TVL at the moment. Solana has around 17.2 billion. And then it goes down from there. Those are the two largest. All right, so TVL has for a long time been the most popular metric for assessing chains. And I would say it still is. However, it's become significantly less popular in recent years. And we're going to talk about some of the reasons. First, why is TVL good? TVL is useful because it incorporates dollar values and it allows you to compare a ton of different applications. So for example, Ethereum has around 1,200 protocols that are tracked here on it. Solana has around 180. And you can say, okay, there's a lot of different protocols. Some of them are lending, some are liquid staking, some are decentralized exchanges, and so on and so forth. What's the summary, right? And what this tries to tell you is the summary is the total amount deposited into all of them. And we see, of course, Ethereum is quite a bit higher. Solana is at an all-time high in terms of its dominance at around 10%. So one thing that's important to consider is Solana is still below its all-time high in terms of price, although it's at its all-time high in terms of market cap, but it's below its all-time high in terms of price. But it's basically at a never-before-seen level of dominance in terms of actual DeFi deposits. So that's some of the reasons that people like TVL, right? However, it has some major limitations that we can overcome by looking at other metrics. And the first limitation is that this doesn't actually tell you the activity on the chain. So we talked about some of the reasons why transactions can be bad because, for example, on Solana, because it's so cheap, someone can make a transaction for 50 cents. And, that doesn't really deserve the same weight as a transaction for, say, $1 million because there's different values they bring to the ecosystem, right? Not to diminish the importance of having lots of 50-cent transactions, but you have to look at them in aggregate. But the problem with not taking into account activity at all is on Ethereum, for example, as we'll see when we look at stats, a lot of this TVL is kind of what you might call stagnant, right? So huge amount of it is just liquid staking Ethereum. Roughly a third of it, in fact, is liquid staking on Lido. And if you incorporate other liquid staking, it's probably more than a third. Then you've got a ton of that is deposited, for example, as collateral for borrowing against on things like Aave or Maker. And those are all useful, right? But that money that's being deposited there, right? It could have been parked there years ago. It may have, some of it may have been parked as ETH all the way back here in 2020, and it's been sitting there. Phenomenal. If someone can borrow against it, they might accrue some interest. They might be accruing liquid staking rewards if it was parked there after Lido came out. But that may not actually reflect the current state of the ecosystem, how many people are actually interested in using that chain, buying, etc. And again, we'll look at some other metrics that do. The other reason is that in 2024, there's actually different designs for decentralized exchanges, for example. And so you might have one protocol that has more liquidity, but another protocol that uses concentrated liquidity or uses some other sort of design that can actually offer as good rates. And so in that case, there's actually a case to be made that having less TVL but using it more efficiently is in some ways even better than having more TVL because you're not locking up funds that basically are wasteful or don't need to be used. And then I think that the other argument is, and when we look at fees, which is going to be the main metric we use today, I'll reveal it, that fees are the metric that I think is most important, is that different TVLs have different abilities to capture value. So for example, DEXs are some of the best at capturing value. Perp DEXs, which Solana actually has they have Jupiter is a major one, but perp DEXs are probably even better than DEXs at capturing value. Lending markets are a little bit worse. Liquid staking, depending on the model, can be, it's probably comparable to lending. Oftentimes can be a little bit below lending compared to the amount of TVL that's in there. But basically the point that I'm trying to get across is that these different types of protocols, they actually can have different levels of economic productivity, right? Whereas a protocol where money, again, is just being parked for a long time, it may not actually be contributing that much to the economy. And one way I like to think about that is compare a software company, say compare like Meta or Google, to a financial firm that has $1 trillion of assets under management, but whose revenue is a small fraction of Meta or Google. And if you were just looking at the assets under management, you might say, well, this other protocol or this other company, they're managing $500 billion or or they're managing $1 trillion. Of course, they're more valuable, right? But that's not really the case because Meta and Google are actually using their resources more effectively. And then you also have the fact that in some cases, and I mean, this is a actually good example, something like Meta or Google, they're not taking deposits, right? It's not a financial firm. So you have other types of applications on these chains now that might have zero TVL, but they're still producing something economically. So the next metric that a lot of people go to is volume. And let's look at volumes by chain. This is volumes on decentralized exchanges. And in this, Solana has been completely dominating recently. If you go back even, say, a few months, Ethereum was oftentimes higher than Solana. Earlier this year, when Solana was booming, Ethereum was pretty firmly in the lead. However, if you fast forward to October or November of this year, Solana has just been basically blowing Ethereum out of the water. So far this month, Solana has more than twice the volume of Ethereum. And over the past day, and this has been consistent for several days now, Solana has actually had roughly 50% of all decentralized exchange volume. So it has as much as Base, Binance Smart Chain, Arbitrum, Ethereum, Avalanche, Sui, all those put together. Solana has as much DEX volume. And this has some advantages over TVL. It incorporates activity. So this shows us, for example, Ethereum has tons more TVL especially than these other chains, but people are not actually using that TVL to transact, right? It's kind of sitting there, and that's fine, but you should take that into account. Ethereum also gets complicated because you have Base and Arbitrum, which are built as layer 2s on top of it. But again, Solana is 50% of all this. But so that's one of the advantages of DEX volume. The downside is that if you go, for example, to DEX Screener and look at the top pairs, you've got, of course, Sol USDC is number one. Another Sol USDC on Radium is number two. Then you get a lot of tokens that have not been around for that long and may not be around for that long. And I think there's a fair argument to be made either way over how valuable this volume is, because is the volume of, I don't want to pick on any particular one, people say that I'm fudding, but any of these particular tokens that, let's be honest, are probably not going to be around in a few weeks, if not a few days. Is the volume for that particular token that valuable? Probably not. However, as we can see, if we zoom in on Solana's volume in aggregate, Solana is able to consistently bring in volume from new tokens that won't be around that long. So, for example, this past week, around $41 billion of volume, and it's just been doing tens of billions of dollars of volume for a number of weeks now with a noticeable pop recently. And so I think there's an argument to be made that, okay, so each individual one maybe isn't that valuable, but in aggregate, it's able to attract a lot of value, or a lot of volume and a lot of usage to the chain. And you can see that because it's had that volume week after week after week. But I still think DEX volume has some issues. There's this issue, of course, right, that there's a case to be made that this volume is less valuable. It also has the issue that DEXs are just one use of a blockchain, right? So I think this is good, and this is pointing towards, again, Solana being probably undervalued at its current price. Half of all trading is taking place on Solana, 50%, and the market cap is less than a third of Ethereum. Maybe you'd say Ethereum is overvalued, right? But Solana certainly doesn't seem to be valued significantly higher, especially when you consider that almost all of these tokens, almost all of them are going to be traded against Sol. You can see that here in the descriptor. And so they're traded against Sol. In order to trade these things, you have to buy Solana. Total value locked is imperfect. Volume is imperfect. But one metric that I think is the most important for assessing chains, and I think you're going to see a lot more people using this in the near future, is the fees of applications on the chain. And I don't mean the fees of the blockchain itself, what people are paying to use the chain, although that will go into it. I mean the fees in aggregate of all the different applications that are on the chain. And the reason why is that this measures the actual usage of the chain and what people are willing to pay to use it. And the reason why fees are so powerful is that they're really tough to fake. So for example, we see Radium generated around $12 million of fees over the past 24 hours collected from swaps. So even if you believe that, for example, these coins, a lot of it's if you believe it's wash trading or whatnot, the amount of wash trading you can do is somewhat limited by the fact that you have to pay a fee when you do it. And if you're wash trading over and over again and nonstop, then you're going to be racking up fees that you're paying to liquidity providers, to the protocol, to token holders, etc. And that's going to kind of place some sort of, it's going to make these numbers much more real than something like volume, certainly something like transactions. And then it has the added value over total value locked that this measures activity. So for example, not to pick on Uniswap, but Uniswap, which used to be for a long time, was always near the top here. Uniswap had around $1.17 million in fees in the past 24 hours. Uniswap is, of course, the top decentralized exchange on Ethereum itself. So Radium, basically, users paid 10 times more fees to use Radium than they did Uniswap. And let's look at some of the other top applications. So we've got a couple here that are stablecoins, Tether and Circle. And this is calculated fees that are generated because it's backed by predominantly short-term treasuries, and you can calculate the interest on that. So that's where that comes from. Technically on Ethereum, because a lot of those tokens are on Ethereum. In truth, a lot of this is kind of happening off-chain. And so I consider this to be, a little bit less important, but we see that here. And if we look at the other top protocols, we've got Radium, the top decentralized exchange on Solana. We have Solana itself. So even though the fees on Solana are cheap, there's so many transactions going on that in aggregate, people paid $8 million in fees yesterday, 50 million in the past week. There was some criticism in the past of how can Solana be economically viable when the fees are so cheap. Well, look at this. Past 7 days, Solana, $50 million. Ethereum, $71 million. So Solana, people are actually paying roughly 5/7 what they're paying to use Ethereum, with the market cap less than a third. Going down the list, we have Jito. Jito is the top liquid staking platform on Solana, and it also earns fees from MEV. You have Ethereum itself. So note that the past 24 hours, Solana is actually collecting more fees than Ethereum. You have Circle, that's USDC, another stablecoin. You have Lido, which is the top liquid staking on Ethereum. And then I'm not going to go through every single one, but just look say the top 15 here. You've got Photon, a Telegram bot on Solana. PancakeSwap, which is on a whole bunch of chains, but largely on Binance Smart Chain. You've got BonkBot, another Telegram bot on Solana. You've got Pump.fun, a launchpad for launching meme coins on Solana, and one of the big impetuses behind all this activity. You've got Tron, where there's a ton of activity sending stablecoins, peer-to-peer payments. Of course, Tron is its own network. You've got Trojan, another Telegram bot, and then you've got Uniswap. And then for 15, you've got Blockstrew, which is MEV and is also on Solana. So let's just look at this. Top 15, past 24 hours. We've got 1, 2, 3, 4, 5, 6, 7, 8 on Solana. More than half of the top 15 protocols by fees are on Solana. And it actually, if you were, for example, to take out Tether and Circle, given that those are stable coins and a lot of that fees are actually coming from off-chain, this would be even more lopsided, right? Then you'd have a large majority of the top 10 protocols by fees would be on Solana. I personally like to call this metric chain GDP. It's kind of like the GDP of a chain. Basically, it's the size of the economy, how much money is being transacted. I use the DeFi Llama API to calculate this every week, and I share it in my premium newsletter, Substack, dynamodefi.substack.com. But to give you guys a preview of what that looks like, if you look at this past week, then Solana had a GDP, put it in quotes, right, because it's not exactly the same as real GDP, but GDP of around 200, we'll round it up to $241 million. Ethereum, $270.5 million. So Solana's GDP, the sum of all the fees of every application on Solana, that includes small ones as well, nearly as high as Ethereum, and a drastic increase from the prior 7 days. And so my takeaway from this is that Solana at its current valuation, compared to the proportion of economic activity in crypto that's happening on Solana, it's actually undervalued. It should be higher if you look at the fact that it is neck and neck to have the most economic activity of any smart contract chain. However, there are some risks to be aware of. First, Bitcoin is at over $90,000. Guys, I think that we are still in the early stages of a bull run, as I've said in other videos on this channel. When you have nation states buying, you've got ETF inflows still pumping in week after week. I think this is going to push higher and eventually break 100,000. But for example, Bitcoin retraces to 80,000. It retests its previous all-time high in the 70,000s. It's going to take Solana with it, right? Even a chain with good fundamentals, it's not independent of Bitcoin. That's nearly a $2 trillion market cap moving around. So just be aware of that, right? It's all this goes out the window if the entire market corrects. Other risk to consider is that while the fees on Solana-based applications are beyond impressive at the moment, we don't know whether this will last forever. So if we look, for example, 7 days, still pretty good, right? And I showed you those stats of the chain GDP over 7 days. We go to 30 days. Still good, but a little bit more Ethereum centric, right? You see here, Ethereum has more fees than Solana. You go back to 1 year, right? The Solana applications are just starting to get into the top 10 on an annual basis. And so the reason I'm showing you this is that in order for Solana to continue repricing, I think it's already started to reprice from this activity. In order for it to continue repricing, you got to have this activity keep up, right? It has to continue to occupy, say, a close to or a dominant position in terms of economic activity. Another reason to be concerned is the one metric that I would say Solana is lagging on is in stablecoins. Solana is currently 5th in terms of stablecoins at $4 billion. Ethereum has 94 billion. Tron has 60 billion. Now, one thing to consider is that, again, a lot of stablecoins could be stagnant, or they might be being used for things that are less economically productive. On Tron, they're being used largely for things that are more economically productive. They're being used for peer-to-peer payments, right, rather than for DeFi. So it's not a perfect one-to-one of stablecoins to market cap. However, this is a metric where Solana is seriously lagging behind. And if I were to give advice to the Solana DeFi ecosystem, team, foundation, whatever, I would say probably you want to sponsor, so you want to support some projects that are going to try to attract more stablecoins on here. And this would be one metric I would look for, right? If Solana is really going to break out and make a run at becoming competitive with Ethereum, you're going to start seeing some serious stablecoin inflows before that happens. So I would keep an eye on this, but this is really the one place that it's lagging right now. By the way, reminder that if you want to learn how to do all this sorts of analysis of on-chain metrics yourself and understand in detail what all these mean and when to use them, check out my newsletter. Every week I send out a piece of analysis myself that I think is interesting in the current market. Here's some highlights from last week. And then also here for premium subscribers, I have a detailed report every week about on-chain metrics. That's where that chain GDP comes from. And then I have a 3-hour mini course on-chain academy for you to learn how to do all of this stuff yourself. Given Solana's dominance in on-chain usage right now, if that holds up, where might we expect its price to go in the near future? Well, I don't have a crystal ball, so understand that this is not financial advice. And like I mentioned before, there's a number of risks that could prevent this from happening, but let's just take a look. So the first main target to keep an eye on is Solana's all-time high from back in 2021 of around $259. And so that's the first place that I would look first for the price to push, significant resistance there. And but if we can push past that then we're going to be in price discovery on Solana for the first time in over 3 years, and things could get interesting very quickly. So if we look at some Fib extensions on here, then a few targets to look at. First would be around $280. Then moving up, we would be looking at around $328 and then even $357. And if you want to get more ambitious beyond that, then I think a good target given Ethereum's current price is going to be around $400, $398 to be more exact. And the reason being that is that would put Solana's market cap at around 50% of Ethereum's. And in bull runs, especially in crypto, we know that things can get crazy. Things can completely overshoot. I mean, it wouldn't shock me if Solana got close to flipping Ethereum. Maybe it even does flip it, right? You guys know I'm a big Solana bull. But I would be surprised if Solana flipped Ethereum in the near future, simply because there's so many hundreds of billions of dollars of market cap that it would have to add. There's so many smart supporters of the Ethereum ecosystem, for example, Coinbase, and there's a lot going on in the ecosystem that contribute to it beyond just the things we talked about today. Comment down below where you see Solana going in the near future. For more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.